Hello, my name is Fred Amrine, and I am the founder and CEO of Pay for Ed, a company that's solving and preventing the student debt crisis. I want to welcome you to our new YouTube channel, and I hope you will subscribe to our channel as we try to build this up and provide the information that you need to make better student loan repayment decisions and college funding decisions. This program is going to specialize on student loan repayment for the married couple, which is a missing piece, and not many people have the information or the technology to provide the proper answers that many couples face, because it includes your tax filing status, how your debt is structured, and then, of course, the different loan repayment options. So just a brief history of who we are and our company. I founded this company and been developing this software for the last 10 to 15 years. We believe it's a tested approach, so it was built on Excel, and then we brought it to the web in 2018. And our company mission is to prevent and solve the student debt crisis. We have 3 solutions that help families and students make better college decisions. I'm a national expert in this space, been quoted in many of the national publications, and we're excited about bringing this information to the public. I believe the biggest problem couples face is how or where they get their advice from. And the problem is not so much where the advice comes from, but the advice providers have all different goals, and I think that becomes the problem. The loan servicers are there to provide information, but it can only focus on the loan repayment options. To properly look at this, you have to include your tax and your debt structure as part of your solutions. Your tax advisors are really focusing on your tax. They don't see the complications of your loan repayments and how that can affect that piece of your financial life. So a combination of both the taxes, how the debt is structured, and then also the loan repayment options all come together. And your lenders are another resource for you, but their primary goal is to move you to a private loan, which may still be a great solution. But again, you have to understand all of your numbers and all of your options as you go through this. As I said, each of the providers have different goals for you, and what we've created is an objective and comprehensive view so that you can make the best decision. And here's the reason why. We believe it's the untold story. Many don't realize is that a married couple that both have federal loans have over 126 options to consider to find the best solution. And that's what we've done for you. We've created those solutions for you. So we have to look at your marital status, how your taxes are filed, your debt structure, do I have private and federal? And then what is your cash flow? Sometimes you may have to take a step back just to maintain and stay current on your student loans. But that will provide you the best student loan repayment answer for your situation. The biggest issue is student loan repayment is different. We have a traditional mindset of that we need to look at the amount or interest rate or time and monthly payments. That is true in most cases when we look at car loans or mortgages. But if we're using one of the income-driven repayment methods, which is now based on your income and not the debt and the percents, you have to take a different view, and that's part of the confusion that many of you face. You still need to consider traditional views, but you have to now manage your adjusted gross income. Your AGI is a tax issue. Your marital status, are you filing your taxes married and joint, married and separate? Or if you're engaged, how will that change? Do I file married and separate from a single, or do I go to married and joint? How your debt is structured. Again, people don't realize that if I move to a private consolidation, that may affect my spouse's ability or options that they may face. And am I going to qualify for public loan forgiveness or just the general forgiveness? Again, we will cover those things in this discussion, but you need to understand what your total picture looks like. So the importance of your taxes for the married couple, and what I mean by the married couple, this is a couple who has filed their taxes at least once as a couple. Then they have to look at, are they going to file married and joint if they file married and separate, or the alternative, do I file married and separate if I file married and joint? And a lot of times this changes, especially for the recent graduates. Say someone was in grad school and that maybe they're filing married and joint and now repayment will begin. They may have to reconsider their options. Probably the most confusing piece will be the people that are recently married. So they never filed their taxes as a couple, or the engaged couple. Then they have to work through, do we file our taxes married and joint, going from a single or head of household, or do we stay married and separate? Now, each of these options have different tax ramifications, and we recommend that you get your taxes done by a professional when you have these discussions, since there's many hidden rules that you're unaware of. What people don't realize is how the debt is structured. So if both have federal loans, it will complicate the process a little bit, but also allow you to have many different options on your tax filing status. Other loans, such as a private student loan or a Parent Plus loan that maybe you're responsible for, will have some impact on your cash flows. As an example, a Parent Plus loan, even though it's a federal loan, if you're the student, that is legally the responsibility of the parents and cannot use any of the income-based repayment methods. Then you have to look at refinancing options. Should I do a private consolidation? But that will now move you away from the federal programs. And once you move to a private consolidation, you can no longer return to the federal methodology. Also, a big issue is co-signing for your spouse. If you're a married couple and the person has high debt and you co-sign, that may limit your ability to get a mortgage because now both you're responsible for that debt. And then in your plans, properly looking at their loan forgiveness, specifically public service loan forgiveness. Just a quick review of loan forgiveness. They need to be federal loans. That's the first part. They need to be direct federal loans, actually. For public service loan forgiveness, you need to make 120 on-time payments. You need to be using one of the IDR methods. It needs to be a direct loan. You have to be a full-time employee, but it is a tax-free benefit. So once those loans are forgiven, it is tax-free. Versus a federal loan forgiveness program, that can run anywhere from 20 to 25 years, but the amount that's outstanding will be taxable. So it will be added onto your income in the year it's forgiven, and that could be a significant amount of tax that we do at that forgiveness time. So I wanted to run through a case study to show you how diverse the numbers can be. So this is a married couple. One qualifies for public loan forgiveness. Spouse one has debt of just over $65,000. The person who qualifies for public loan forgiveness has just over $97,000. One makes $50,000, another one makes $60,000. They only have themselves as exemptions. One does qualify for loan forgiveness. There is a retirement match. And here's the first step. If they file their taxes married and joint, their taxes will be $84.39. Yet if they file their taxes married and separate, they'll have an increase of $730. Now that's where the tax advisor is probably going to say, why would you pay that? And you're going to see in a minute the differences in the loan repayment options that this couple will have. This is a subset of the 126 options that I displayed earlier, but this is for spouse 2 and the option that this person may have. So they're both saving in the retirement plan. Initially, they're saving $5,000 each, and we're seeing in the third option that we're going to put all the retirement savings in the second person, in spouse 2. But let's look at the pay-as-you-earn monthly amount. If option 1 and they both have federal loans, our student loan repayment will be $322. But now say spouse 1 refinances and only spouse 2 now has federal loans. Because they're going to file married and joint and all their income will go against spouse 2, their loan repayment will go up to $586. That's a significant increase. Now, because of that refinancing, that may limit them to how they can file their taxes, since now to properly match this up, they can now move all the retirement under spouse 2, and if they file their taxes married and separate, their amount will go down to $244, but they will see an increase in their taxes of $61 a month. These are all monthly numbers. So you can see how diverse the numbers can be based on how you file your taxes. So I just want to give you a quick summary of how the numbers come together here. As you can see, we use pay-as-you-earn, and our range was from $586 to $244. That's $342 a month in a family's pocket just by making the right decisions on where to put the retirement accounts, how to file their taxes, and how the debt is structured. This is the information that our Pay4Ed software provides for you. The loan servicers can't provide this advice. They can't explain the 126 different options. They can only maybe explain 8 to 6 of them for each person. Your tax advisor will only look at the best way to serve your taxes and doesn't see how your debt is structured or what that impact will have on your loan repayment. And this is often overlooked. And all we're trying to do here is improve your financial future, reducing the stress by giving you transparency to your financial outcome. So what do you need to do this? One, you need to develop an approach that you can see all your options, not just a few selected ones. You should get your tax reviewed by a tax professional because many of you will see different changes such as buying a house, having children, which all can have an impact on your different repayment options on what decisions you make. One of the biggest mistakes is picking the lowest payment per month may not be the best option. The loan servicers have a tendency to move you to the lowest payment, and what's not explained to most couples is that you're going to have negative amortization. What that means is that you're not covering the interest charge that the loan has, and now you're actually adding debt, additional debt, onto that loan balance. within our software, we explain what that number should be. And then you have to consider loan forgiveness, especially if you're qualifying for public loan forgiveness. There's only certain methods that will qualify for public loan forgiveness, and this again adds additional complexity to you as a couple. And then proper planning for life changes such as the house purchase, saving for retirement, and other goals that you may have are an important part of your financial future and making this best student loan repayment. Here at Pay for Ed, our goal is to solve the student debt crisis. And our mission is to be a trusted second opinion that you can get the transparency that you need to make a better decision to improve your financial future. Down below, please subscribe to the channel and register for our newsletter, and have a great day. See you at the next video.